What to do with Alphabet Google stock. Now, they're going to have a 20-for-1 stock split this Friday, July 15th. That's going to initiate, and it'll be active for trading on Monday, the 18th of July. And you're wondering, Eric, should I rush out and go buy some shares of Alphabet Google, or should I wait till the stock split? What does it even mean for the company? Why is it doing a stock split? What are some of the implications, ramifications? I'm gonna break that down for you in this video. I'm also gonna show you some valuation metrics, including price to earnings ratio, as well as price to sales ratio, look at historic price to sales ratio, and see if it's of value now. We're gonna talk about some of the exciting segments of the business that you might not even know about, including drone delivery and autonomous driving. And then I'm gonna break down a chart and show you from a technical level where I think the stock's gonna go. Everything you need to know about the Alphabet Google stock split is right here. You're gonna wanna see this one. Stay tuned. My wife said not to shave it, so the beard is staying for now. So this is actually old. This is from February 2nd. So back on February 2nd, they announced, Google parent Alphabet announced a 20-for-1 stock split. Here's what it means and how it'll impact investors. Now this is going to initiate again this Friday, July 15th. Now we've seen lots of stocks do stock splits recently. We saw Shopify, Amazon, we've seen in recent years, Apple, Tesla, and so on. What does it even mean though? If you're not familiar with what a stock split is, what does it actually mean? Does it impact the business fundamentally? Is it a reason to go buy the stock? What exactly is a stock split? So put simply, a stock split is when a company divides up its shares to lower the price and increase the overall amount of shares available. A company usually undergoes a stock split when the shares have gone very high. Now Google, Alphabet, there's two different share classes. There's A and C. So there's the C shares, which is GOOG, and there's the A shares, which is what I own, GOOGL. So it has an L on the end. The only difference is going to be voting rights. It probably doesn't matter a whole lot. There's probably more volume on the C shares, the GOOG. So basically a stock split, guys, to put it simply, if you take a pizza, one pizza, and you cut it into 20 slices, you still have one pizza, right? Now, the difference is when you look at things like options trading, you need 100 shares for one contract. If the share price is $2,300 for one share, it's very expensive to do an options contract. So if you break that down and now it's only say $115 a share, it's much easier to own 100 shares. So you do see some pin action from stock splits. You also see more, especially retail investors, buy the stock. And oftentimes you see short-term movements where the stock goes to the upside. So traders will jump in. Most of the time that's short-lived, and you'll see it come down. When you think of NVIDIA, which had a stock split around this time last year, the stock ran hard and basically doubled, and it's come back to those pre-stock split levels. You see that happen quite a bit. Now you could argue that wouldn't have happened with NVIDIA if it weren't for the market being down overall. So of course, back when this article was written, Alphabet shares were around $3,000 a share. Now they're closer to $2,300 a share, $700 off of that number. And so here it says, the company's chief financial officer indicated the move will allow more people to invest in the company. It makes it more affordable to more people. More retail investors can own shares. The reason for the split, this is a quote, is to make our shares more accessible, she said on Tuesday's conference call. We thought it made sense to do. Now, analysts have also speculated that companies like Alphabet and Amazon that have expensive shares, that they're trying to do these stock splits to get into the Dow Jones Industrial Average. Of course, neither Amazon or Alphabet are part of the Dow Jones right now. You'd have to kick somebody out to get one of these guys in. And it's speculation. We don't know for sure. This could be the move that gets Google into the Dow Jones Index. Wedbush Securities analyst Dan Ives tells CNBC Make It. This would be a positive impact to the stock as being part of this flagship index, which would cause index buying from investors. Institutions would have to buy shares and so on. Not to digress, but it is interesting to think of companies like Alphabet being in the Dow Jones because it's an industrial average. And of course, Alphabet, Google, you don't really think of it as industrials. Now they do have components of their business that maybe are somewhat industrial, but it's a tech company. And most people, when they think of it, you think of Google when you're doing a search, or you think of YouTube. I'm going to talk later, though, about exciting segments of their business, including Waymo, which is in autonomous driving, also Wing, which is drone delivery services. Now, here's some more speculation from CNBC saying that Alphabet could replace IBM in the Dow Jones. Now, back then, the price would have been a little bit higher, but it's saying that it could be swapped out for IBM without little impact to the index since both are on the same stock price. Now, if you look at the stock prices now and you break it down, you do the 20-for-1 split, IBM is trading at $140 right now. And if you do the math on the 20-for-1 stock split of where Google is trading right now, and I'm using GOOGL, the A shares, it'd be about $115 a share. So not quite as close as when this article is written. They were both around 135 then, 140 then. Now it's a little bit of a gap, but still very close, and that could be a possibility. So Google's stock split history, if you're not familiar, back in 2015, Google restructured to operate as a subsidiary of newly created holding company called Alphabet. This is kind of confusing, but essentially Alphabet became the holding company of Google because they wanted to diversify outside of just Google. And they had YouTube, Waymo, all these things that they wanted to get into. Now, until April of 2014, Google's Class C shares were not available to the public. Google announced a 1998 for 1,000 stock split in January of 2014, where holders of 1998 existing Class A shares, GOOGL, received 1,000 Class A shares and 998 Class C shares returned. Kind of confusing. Now, since that split, Google has returned about 300%. And out of that, it basically doubled in the last couple of years. This is from their shareholder letter. And I want to go into a couple of these different companies that they own, some subsidiaries that you might not know about. So Wing unveiled a new model for drone delivery that will allow expansion into densely populated metropolitan areas. Delivery drones will be staged as retail locations ready to fly directly to customers. Wing has launched the model in Australia. This is several months old, and the US. Walgreens will be the first retailer to use it. So where we fly, this is Wing's website: Finland, Australia, and the United States. Now, right now, United States is Virginia. You can see here directly to your home through the air. So they've got coffee and cupcakes and Mexican food and so on that can be delivered. When you look at Finland, we've got Helsinki there, and you've got some different options that they can do in Helsinki. And then you have Australia, delivery within minutes. They've got espresso, they've got different food items and so on. So this is active in those three locations, kind of beta testing. They're trying to roll this out everywhere they possibly can. Okay, how does this work? Your goods delivered in minutes. And you can see one of the drones here in the package kind of attached to the bottom. It looks very similar to Amazon's drone delivery service. So here's Walgreens. So 200,000 commercial drone deliveries. 2 minutes and 47 seconds is their fastest delivery, 10 locations in 3 continents. Approval for drone delivery in our first US service area. And so you can see that these things are pretty cool. They deliver products. You got KFC, Walgreens, several different vendors are starting to use them. So delivering to customers in 3 continents. We're going to click more. Easy to use. This is going to show you the order, like how the process works on the app. So scroll through businesses in the community, search for a specific item, place the order. Your order gets attached to one of these, whatever that's called. It's like a drone bag. Your order's on the way. You can track it right on your app. There's no need for you to unclip or assist with the package. You'll be gently lowered to you. I'd love to try this, actually. So it shows you the aircraft again. It says here 64.9 miles per hour. I was a little bit surprised when I saw that. 64 miles an hour. I mean, that's moving pretty good for a little drone. It says round trip distance is about 12 miles. So you have to have these, service centers basically that are within a lot of different homes because they can only go about 5-6 miles one way, drop off, and then get back to the facility. So the weight of the drone is 11.4 pounds without delivery. The max weight is 2.6 pounds. So you can't have a huge order on that, of course. It's usually something light like coffee, cupcakes, to order for food, something like that. And the wingspan's about, 3.3 feet, which, seems pretty big, I guess. It makes sense. It's about right. You wouldn't want it much bigger than that. But this is pretty cool stuff. I think it's a big part of Alphabet's future. But wait, there's more. Deepmind released the AlphaFold protein structure database in partnership with the European Molecular Biology Laboratory. This is way above my pay grade, but they've got this Deepmind. So it's a database helping 400,000 researchers across a huge variety of fields to accelerate their work. And now Deepmind plans to add over 100 million structures. So Deepmind, really cool stuff. We already talked about Wing. What else? Waymo, autonomous driving. 2021 marked the 1-year anniversary of Waymo One, Waymo's fully autonomous ride-hailing service in Metro Phoenix. So this is just like Wing. It's being used in Phoenix in that kind of beta model. Phoenix has served tens of thousands of rider-only trips to thousands of paying customers. You might not know that. Waymo also welcomed its first riders in San Francisco through the Waymo One Trusted Tester program. So again, they're doing testing, beta. And throughout the year, Waymo Via delivered freight autonomously for key industry players, including J.B. Hunt and UPS. This is huge, and I think it's a big part of the future. So check out this one right below me. This is pretty cool. Now this is X. Now Alphabet's making software for these robots. So they're developing software tools to make industrial robots easier to use, less costly, and more flexible. That's really cool stuff. And then you've got this isomorphic laboratories. So this is a commercial venture that will take an AI-first approach to reimagining the entire drug discovery process from first principles, as well as modeling and understanding some of the fundamental mechanisms of life. So we're getting more into AI, but into biotech. So I think that's really cool. Alphabet's very diversified. You've got the things you know about, like the advertising, Google, YouTube. There's the things that you know about, and there's this stuff that you might not hear about every day. So let's talk about valuation. Is this stock a buy now? So I personally like GOOGL. We're going to look at GOOG here. It doesn't really matter. Again, it's voting shares, C shares, A shares. So if you look at this, this is going to give me a max. So this is going back to 2018. You can see right now the price to sales ratio as of today, July 12th, is 5.792. Now, if you look at that on a chart, you can see it got down to 5.278. Now back here in 2020 in the pandemic, it got down to a 4.56. So if it gets below a 5, that's kind of a no-brainer buy area. It hasn't been that low. That's the lowest it's been. This was in April or March of 2020 during the pandemic. Historically, though, it's been staying above, this 5.5 range for the most part. 6, it got pretty expensive here, like a lot of things up to a 9, and then it's pulled back. So you look at this and say it's trading maybe a little bit lower than its average over the last 4 years, but we're also in more of a recessionary period. So it probably doesn't deserve a premium. And I think this is helpful just to give you an idea of where the stock is, because you look at it and say, well, it's a 21 P ratio. It's a no-brainer. It's a buy. We also have to look at some of the historic price to sales ratios too and kind of see where it's at. Because I think for me, that helps me understand if the stock is a true value. Is this a growth at a reasonable price type stock? I think it's getting there, but it certainly could go lower as well. The stock split's probably going to give it an artificial boost, maybe short term. And then it's just going to depend on what happens. We've got earnings season. We have CPI data this week, PPI data, and so on. So if the market takes a leg lower, of course, Google is going to, sell off just like everything else. If the market goes higher, this is an attractive level. And if we find a bottom, this is probably going to go back over that 6 range again. But just keep in mind, historically, it's not dirt cheap by any means. So the PE is 20.93. Of course, it does not pay a dividend. The 5-year PEG ratio is a 1.46. Over the last 52 weeks, it's down 8.9%. You can see the low is 2,037. This was on May 24th. A lot of people were waiting for it to go below $2,000. Never happened. So this is a very large cap, $798 billion. Of course, at one point, this was in the $1 trillion club and it's pulled back. The high on this was $3,030. This was on February 2nd of 2022. You might be surprised that it actually had its high this year in February of 2022. Now, if I look at a chart down here, actually what I'm going to do is I'm going to go to TradingView and show you a more detailed chart, tell you where I think the stock might go. Before I talk about the stock price, I do need to announce to you guys, this video is sponsored by the Motley Fool. To see the 10 best stocks to buy now, visit fool.com/fired up wealth. I was saying /fired up wealth and somebody corrected me. It's /fired up wealth. Also, guys, if you've not subscribed to the channel, please do that now. Click the subscribe button and that little bell to get notifications. And if this video is helpful, if you want to help me out in return, hit the like button and drop me a comment. Now, if you like technical analysis, we use technical analysis to get better entry and exit points as long-term investors. So Fired Up Wealth is really about long-term investing. And we do what we call Chart Day every Wednesday. That's in Patreon Discord. You can check out patreon.com/fired up wealth if you want to check that out. Now, Alphabet, Google, this is going to be the A share. So I'm looking at GOOGL. This is what I own. Right now, it's trading at $2,318.35 a share. Now you can see it bottomed out around 2037 here back in May, and it's bounced nicely, hit some resistance here closer to 2350 in that range. And so it's kind of pulled back. Of course, anything close to 2,000 was a buy. You're wondering, is it a buy now? So first and foremost, 20-for-1 stock split is going to happen Friday. Now I'm going to have people tell me, Eric, it didn't actually happen today. It's not showing in my account. It's going to take over the weekend. And on Monday, I promise you, if you have a decent broker, you're going to see that stock split take place on the 18th. So it's going to happen on the 15th. Technically, it might take a day or two over the weekend for your broker. And on the 18th, that morning, you should see your shares. So if you own one share of Google, either class, it could be GOOG or GOOGL. If you own one share, you're going to get 19 extra shares. You're going to have 20 for one, okay? So right now, to give you an idea, $2,300 a share would make it $115 per share, okay? So where do I think the stock's gonna go from here? You know, honestly, here's the hard part. We're gonna have CPI data tomorrow morning. So this video is gonna come out before that. If CPI data is hot, the market's gonna sell off. You need to look at this range. I think $2,200 would be the first support level, and then maybe $2,100, but you're probably gonna be in that $2,100 to $2,200 if the market kind of sells off. A retest would be closer to $2,000. Now, if CPI data is positive, PPI data on Thursday is positive, consumer sentiment on Friday is good, you could see a rally next week and you might not see these prices again. It's hard to say. So most people are going to tell you that the stock market's going to go much lower. Don't buy anything here and wait. And that could be a possibility. Oftentimes when everybody thinks something's going to happen, it doesn't happen. So you have to make your own decisions. I'm giving you possibilities. I'm not a financial advisor. I can't tell you what to do, where to buy. I think it's attractive. 2,200 to 2,000. Even where it's at, I think it's attractive. Of course, the lower the better. But what's going to happen more than likely if the market holds up, you're going to get that stock split. You're probably going to see the stock run from there because at $115 a share, more people are going to buy it and it's probably going to pop up. So that's my prediction. It's hard to know for sure. Again, economic data always is going to trump technicals. The fundamentals always trump technicals. We're also in earnings season. So if we start seeing earnings revisions being guided down, the whole market could take another leg lower, could retest lows. And you might even see this thing below $2,000 a share pre-split prices. So hope this video is helpful, guys. I appreciate your time and attention. Have a great rest of your day. Take care.